All right. Sorry, I missed that. Thanks so much for tuning into the trade setup right here on BloombergQuint Live. I'm Niyat Shah. And it's a Friday, which is looking a bit more fair from a bull's perspective, and that's actually a good sign. Let's put all the moving parts into perspective. First, what happened to the world markets overnight? And I think there was a bit of a rebound on the Dow. Maybe not as much on the Nasdaq, if you will, but the Dow had a fair degree of rebound, and therefore you would see positivity. As you can see these lines as well, you'll see the Nasdaq composite just having a 15-point gain, right? So the Nasdaq didn't have as much of a pullback. The Dow, from the lows and the red line, you can see climbed quite a bit, so about 0.5% or thereabouts. Nothing dramatic, but did climb from the lows of the day, and that's actually a good sign. Now, the question is, what does this hold for some of the other markets? And are a lot of markets so oversold that or sold out enough that they could bounce back? Now, there is an indicator which shows that maybe for the Chinese index, and remember that index has a lot of internal factors, including the fact that the post-pandemic stimulus conversations are gone away in China, and as a result of which the CSI 300 has hit a 15% drop, but it's near some key support levels from where could it bounce back? Remains to be seen. I'm not a Chinese market expert, to be honest. Actually, I don't think anybody is. But yeah, I mean, this is interesting what's happening out there. And you could argue the same for some of the other markets too. And I'll tell you why. But first, just before we get there, a couple of other global points. One, what the Asian screen is doing, what the SGX is doing, just to highlight that. So there is green on the screen for sure. And this is something that is pleasing to the eyes, because the last few days, even if we've not been battered and bruised, we've come off quite rapidly, really. Yesterday was a painful day too. And yesterday could be multiple reasons, including March ending, to be honest. But yeah, it was a painful day for Indian markets today. The SGX Nifty, if you will, I'm certain suggests that there is upside. So there is a sharp uptick in store for us. Can we hold on to those gains is the question. Now, just before we get to the trade setup, what is also dominating news headlines is President Joe Biden's first press conference, a public press conference post taking the job of the president. And I think he made various points, but including this, right? He's saying China won't be the most powerful country on his watch. And he said that he's going to run for re-election in 2024. So with a presumption that Joe Biden believes that he might come back in 2024, which means that US will do everything in its arsenal to counter the China threat, so to say. As I said yesterday, or day before yesterday on a tweet, the trade war isn't going anywhere, is not going anywhere, really. Now, the trade setup for the day today, I don't need much to tell you that we are going to bounce, because the markets are showing that. The advantages or the building blocks to this. One, I think you have to draw comfort from the fact that crude prices have retreated. They may go up a little bit because of the Suez Canal blockage, etc., and all of that. But crude prices have come off, and that's a big plus point for India sentiment. And yields and real rates also have retreated, which will aid sentiment. I was looking at the US 10-year, 1.62 or 1.61 or thereabouts, from highs of 1.75, which really spooked traders, remember? So yields have come off a bit. And I somehow think that risk-on trades could get rewarded meaningfully. High beta, tech companies, real estate, all of these are firm favorites. And I know real estate and high beta don't quite gel, but rather tech and high beta don't quite gel. I think tech has got specific reasons because of the fact that in a week's time, in less than 4 trading sessions now, we'll be very close to the earnings release of some of the tech companies. And I think because of a strong expected Q4 result, the markets will start taking a liking to these firms. So you have to be mindful of that. Now, the flows weren't the most positive, by the way, yesterday, but let that be, because so now there's a significant amount of selling that has been done too. You've got to question yourself whether all of this can continue, etc., or no. And I think time will tell. But what about the trade setup, or what about the conversations and stocks today? Now, I've highlighted the sectors which I think are firmly in the driver's seat. Let's try and get to some new specific stocks. I think BPCL stays in the driver's seat today in terms of newsmakers. Now, this was long anticipated. You would argue that there's nothing new in this. But The fact that BPCL, when the Numaligarh stake sale has now kind of moved a step ahead, is positive. And yesterday at a Times News event, the DIPAM secretary mentioned that the disinvestment process of BPCL is moving on well and is expected to conclude by September end. They are showing confidence of a timeline. You would argue that even if this gets extended by a bit, they firmly have FY22 within their sights for the divestment, and therefore, if you are a slightly longer term investor, you've got to ask yourself that will a crown jewel in the oil marketing space, moats around entry, etc., will it get divested at the current valuations? Will it be higher? Will it be lower? I don't have an answer. I'm urging you to read reports, try and figure out if indeed the divestments can happen at the current prices or can they happen at a higher price. That's the answer to your question. Okay, what else? There's a couple of small names actually. HG Infra Engineering, if I'm not wrong. I think that one was declared as the lowest bidder for a road project, and therefore could be an interesting name to monitor. I mean, today, since there is a bit of a pop, some of these companies could anyway see meaningful upside. So do watch out for HG Infra Engineering. If it reacts, you know why it is reacting. Two names on which there is a near-term today's cloud, I know overhang today and tomorrow, or today and whatever Tuesday, but the medium term is different. Are the Reliance Jio or the Network 18 or whatever you call it, the Reliance Group subsidiaries, Hathway Cable and Den Networks. Now both of them have an OFS. Promoters will sell about 33 crore shares in Hathway at a floor, which is a discount of 11%, the floor price. Similarly, Den Networks, promoters will sell about 5.5 crore shares at a floor price of 48.5, again a discount of 11.49%. Now, I think this is a precursor to an eventual merger into Network 18. It just looks like that, and therefore, while the stocks come off today, you got to ask yourself if you're bullish on the Network 18 group as the media house, stock price prospects, that is, maybe, just maybe, and do the arbitrage math, etc. Maybe these stocks at these levels might give you an opportunity to get into. I'm not saying there is, by the way. I have no idea about the arbitrage opportunity, if any, or the valuations between the three companies. It's very difficult to analyze how media businesses could do. But yeah, I mean, you could do the study, because all I'm trying to say is that these OFSs are the first steps towards probably an eventual merger. You speak to a couple of very smart analysts on the street and they'll tell this to you. So do watch out for these. A very interesting note on Tech Mahindra, and I want to spend a moment or two here. I think the things that CLSA is saying that Tech Mahindra has told them are very interesting. So they've, of course, have a buy rating and a target price of 1180. They are saying that in the conversations with Tech Mahindra has indicated that they has indicated a pickup in deal momentum that could shift its quarterly order book quite significantly. They're saying essentially it will move above the normal run rate in the near term. So in the near term, the quarterly order book will be much higher than what it normally is. They are also saying that the deal momentum would help lower the gap in revenue growth versus peers over FY22 as a year. So they believe essentially that FY22 will be a strong year. They have also exuded confidence that while the top line growth will be there, they will hold on to the EBIT margins at 15% despite all the headwinds, including salary hike, including the fact that there will be transition costs for large deals and that they've resumed hiring. So despite all of this, they will maintain the EBIT margins at 15%. So higher growth at the same margins. They see upside risks. CLSA now sees upside risks to their FY22 EPS estimates, which are built on a conservative margin outlook. So CLSA in its wisdom believed that the margins will stay slightly lower because of all of these factors. Now they believe that there could be upside risk to this, and they believe that there's a potential for capital return and upside from 5G as well. Remember, the talking point for Tech Mahindra has been that 5G spends would lead to big deal wins for Tech Mahindra. Maybe Tech Mahindra is pricing that in when they're talking to CLSA and some of the other brokerages. I think this is remarkable what CLSA's note says about Tech Mahindra. I mean, he is saying that tech is supposed to be bullish, so do watch out for Tech M. Do watch out for Chola Finance as well. The last stock that I want to speak about today. Credit Suisse note, they've retained outperform rating a target price of 630. They believe that FY22-23 estimates they've upped the estimates by 4% on high growth and lower credit costs. They believe that Chola will deliver sector high ROE of 23% versus 20% in FY21. So 400 basis or 300 basis points expansion in ROEs in a single year, which is quite stellar, really. And remember, for NBFCs, a number over 23% is amazing. It's the holy grail, so to say. And they believe that there is a strong disbursement growth of 30% possible, a margin expansion of 50 bips possible, and normalization of credit costs at 110 basis points is possible, which are all key factors for Chola Finance. So they are bullish on this one as well. NBFCs could have a bit of an update if the markets essentially are doing well. So lots of factors which are positive for Chola Finance, but a lot of factors that are positive for high beta trade and tech trade. So I keep on harping upon that. I still repeat that, and do watch out for all of these names. The markets look good today. Let's see if they last. Remember, we are in the run-up to a long weekend for us, where the world markets will be working, so you have to keep that in mind. But I hope all of you stay safe and have a great trading day. And because I'll see you straight on Tuesday, I wish you, I and all the team that put this piece together, wish you a very happy Holi. But please have a safe Holi more than just a happy Holi. Thanks so much for tuning in.